If this is something you want to do, stay the course. Not everything always pencils out. Not everything goes to plan. You thought you were going to make 50K on a flip, you're making 30. Take it on the chin, move on, go to the next one.
Welcome back to Real Investing, where we talk about real investing for the everyday investor, and I apologize in advance for today's guest. But I'm joined by my buddy Ryan Harper.
How you doing?
And my friend Robert Vasquez. Robert,
how you guys doing?
Thank you for being here. So you will never meet a more distracted individual than this guy.
Okay.
There's a method to the madness, all right?
Distracted why? Because you have so many spinning plates, or
People
what?
think that there's major distractions, but the reality is there's comfort in chaos. Okay, I operate well under chaos. When things are going too smooth or too quiet, I don't perform at my peak.
Yeah, I'm actually joking, though, even though my team has now nicknamed me Captain Chaos at Turnus. They're like, right when we think our to-do list is over, it's quadrupled.
Re-upping it.
I say distracted, not to any way imply that you're not handling business, but this guy builds houses, develops land, raises capital, does mortgages, does title. I mean, what did I miss? You fly planes and you ride motorcycles and everything, literally everything. And you seem to do it well.
Hearing you say it, it's almost like the first thing that pops up in my mind is lifestyle by design. The first time I heard that years ago, I thought it was such an interesting concept that it's something I don't think about because I set something in my mind that this is something I'd like to do and it just happens. When you hear it, meaning when I'm hearing you say it, I'm like, that does sound like a lot. But I think it's fucking pretty cool. And to an extent, the simple way I like to think of my life in the future is I like to think of a character like James Bond. I think we're all characters in a story in our life, and you have the ability to kind of choose who you want to be. Sometimes you're a bad guy, sometimes you can be a good guy, right? But who is it that you want to be in the future? And I love the James Bond character. I love the fact that should something happen, you can hop on an airplane and fly. I can navigate a boat. Okay, I could surf. I've gone cross-country motorcycle trips, and I do cool shit. This is not something that it's like I'm being boastful about. This is something that I really want to enjoy my life. And I don't want to end up at the end of the day and say, I regret not doing something.
So I want to kind of focus this interview on real investors and real investing because when I think about, so Robert's an Army guy.
Okay.
Go Army.
We're both Marines.
I'm sorry about that.
Did you bring any crowns?
They took it from me at the airport.
But you're one of the few people in the industry that made it through the Great Recession, right? And those of us that did, like, there's extra scars.
There's a lot of scars.
And you were big in the mortgage market, which, I mean, I was big in the flipping market at that time. So obviously I got scars in different parts of my body, but we both got the scars. What's it been like for you, man, in the last 5 years? The COVID was now 5 years ago.
Yeah.
Hard to freaking believe, right?
Unbelievable.
And I didn't blow up, quote unquote, like everyone else did after COVID because I had just seen that movie before and I kind of just kept everything steady. What's the last 5 years been like for you as an industry veteran?
Shifting, evolving, the things that I'd like to tell myself and judging by what I'm doing and what I'm seeing in the marketplace, it's something that's a little bit different. Again, when you hear someone say, hey, this is what you're doing, it's different than your perspective because you're executing based on experience, not a thought process. Like, I have to do this. Based on your experience of surviving the last recession, you understand that, hey, you know what, maybe you should start looking at market trends a little bit better than you were before. You're flipping properties, you're just flipping properties. You don't have no idea what the hell's going on a macroeconomic scale, right? And when you're having issues with respect to, COVID, for example, COVID had a global shutdown. This is something we've never seen before on a global basis. Now, if I was a fee builder, as an example, hey, my project stopped, right? But I'm not just a fee builder. I'm an investor. I'm a flipper. When I've got a lot of my money tied into these projects, there is no excuse. You have to finish a project. So what do? You shift and you adapt with the market. COVID caused global supply chain issues, okay, that's taken years to recover. Okay, chips on cars, everything, pricing has gone through the roof. So what do? Do you navigate or do you just pause? You put your head in the ground and you do the ostrich effect, which is what many people did during the recession, right? Hey, I'm late on my mortgage, the stress factor, all this stuff that's going on. People put their head in the ground is what I call the ostrich effect. They just pray it's not happening. The bills keep stacking up. You don't open up the mail because you know it's just another bill. So you just pretend it's not happening. We can't do that.
It's still due whether you open it or not.
Well, exactly. It's still due, no matter what happens, but it's still due. And the only thing you can do is you can react to the market, right? Or you can kind of flow with the market. You can't fight it, right? I'm done with that shit. I've been there. I've fought with it. The only thing you can do is essentially be like the ocean and ebb and flow with it and just try to catch the right wave. So if the market's shifting, you have to adapt. Like, we had major issues trying to get trusses. I was in the middle of multiple projects. By the way, not the best areas. I'm the first developer to build in a certain area in Central Florida in over 40 years. There's a reason for it, okay? Well, I personally like, beautifying areas, but the houses, were shot. It kind of give you an idea. And I mid-construction, and I can't find material. So what do? Okay, I'm looking at trying to buy another company, right? Because if I could buy a trust company, that solves my trust problem. I can't find any trust companies in Florida. What am I doing? I'm arbitraging, trying to go to other states and see if I can find a sleepy town with somebody that has a production plant that I could buy their facility. So that's just one example. The last 5 years has been a game changer, but it's also opened up the door to a lot of newer investors that have made incredible amount of money in a short period of time. And respectfully, a lot of these guys don't have a wealth of knowledge, which is encouraging for the younger generation, the newer generation, younger, because you can meet at any age and start, your new venture in life, right? But I look around at these guys, I'm like, man, you don't have one battle scar on you and you're rising. You know what? Good job. But I would take this opportunity to start preparing for the next wave, because if not, what's going to happen, right? Wholesaling, that could run dry. Look, if you were a wholesaler specifically in South Carolina, what happens with the law changes? Right. Now your business is gone. It's eradicated overnight. So you either pack up your bags or you adapt, you overcome, you move to a different market.
What I'm hearing is Who Moved My Cheese? A book recommendation that you gave me.
Such an easy book. An easy book to read.
But it's such a ridiculously easy, stupid book, but it's also very, very insightful.
100%.
Because if you've got enough scars when you're reading that stupid, easy book, you're like, oh, shit.
Yeah, that's my point. You're like,
100%.
Well, obviously, yeah.
I'm almost of the belief that every morning, well, it's not almost, I am of the belief that every single morning someone's trying to move my fucking cheese.
Yeah.
Okay, someone's trying to steal it, and all I'm doing is just looking at different places to shift and adapt, because I don't want to get stuck with a single source of truth, so to say.
Well, and I think, actually, I'll even say it a different way for you, I think. Instead of waking up every morning and someone's trying to move my cheese, I feel like I'm now in the point to where I just wake up every morning and know I need to think about where the cheese is today. Correct. It's not even if someone moved it. Like, at this point, I expect it to be somewhere different every day. And I don't think anyone moved it. I'm just not going to go to the same place I did yesterday. We're going to go somewhere else.
Well, I think also in 2025, with all this AI technology, everything that's coming down the pipeline, even if it's real estate, you also have to have the mindset, is there still cheese? Because it's not only is it being moved, that cheese could just be gone. I mean, because think about it, if you were like, 1912 and you were the biggest horse trader in the world, and all of a sudden, I don't know what year it was, Ford came along, but all of a sudden your industry is gone, so AI has that power to do that stuff. Is it going to happen today? No.
It's happening already, though. It's already happening. I mean, they're eradicating jobs right now. There's a Wendy's, and I just use this as an example because now the Wendy's is AI, and I'm thinking to myself, there's no way they're going to get this order right. And I gave it a complex order during the rain, and it got it perfectly clear.
Wendy's?
At Wendy's, correct. And it was rain and wind. There's no way this is going to work. And it got everything, to include, let me get 2 extra packets of ketchup. I was toying with it. Now again, the error might have been on the physical human who did the work, because the order was right on the screen. Okay, so it's already happening. I like to think that as entrepreneurs or people who have experience in life, okay, and this is most certainly not because I've been doing this, X amount of time. It's just as I've gotten older and based on experience, I've realized that, and I relate this to boating, okay? If you've ever operated a vessel and you're in charge, you're the captain, everyone's having a fun time on the boat, right? Everyone's cracking a couple beers, everyone's having a good time, but you as a captain, you're responsible for looking at the horizon. I say this all the time, especially in the Keys. If you've ever been boating in the Keys, you have to take a look at the difference in water color and shifts and tide and so on and so
It might
forth.
be 1 foot of water.
Oh, exactly. And I'm the expert at finding 1 inch of water in the middle of the ocean. I assure you that. Okay, I've run a boat aground many times. Again, how I've gained this experience. So I relate that experience in boating with being an entrepreneur, that you're constantly having to look at the horizon to determine, is there a storm brewing?
And to piggyback off that analogy, and it's something that I have not been the best at in my company the last past couple of years, is yes, you're the captain, but you cannot be the guy that's like, oh fuck, oh fuck, oh fuck, because if you're doing that, then the people, your employees on the boat that are having a party,
Right.
they don't want to party anymore.
Right.
So as the captain on that barge, in this analogy where all your buddies and all your friends are having a good time, if you're freaking out, they can no longer have a good time. So to go back to the business side of it, if you can't have that air of confidence and be the captain, and you're conveying, oh God, well, guess what? Your employees are going to read into that and go, should I be looking for a new job?
Right.
So-
Well, I think about a story that I read here recently. And by the way, I do not encourage this by any stretch of the imagination. But I thought about, a recent ad that I saw, or post or whatever, that said, FedEx was almost bankrupt. They were down to their last $5,000, and the CEO was at Vegas, and he bet on black or whatever it is, and he won, and his earnings was able to cover the fuel bill that kept FedEx going. Had FedEx have lost that hand in Vegas, FedEx wouldn't exist. So think about the pressure of that CEO going, oh fuck, oh fuck, oh fuck, but not conveying that message to the employees. And look at the incredible organization that FedEx is, and the billions and billions of dollars that it generates, and so on and so forth. So I think with respect to being an owner, look, markets shift, right? And markets ebbs and flows as do the ocean. The only thing you can do as a business owner is try to have the confidence. People say that you should communicate really openly and clearly to your employees, and to an extent you should, but you have to give confidence, because if they're not confident, all right, and you're portraying, hey, you might not have any job stability, what's that going to, or how is that going to portray to the end customer, right? If you're booking loans, I think a customer feels desperate. They feel desperation on the phone, like, oh, you got to close this deal. This is a great deal. 9% is a great mortgage. Just trust me, sign right now. Are you doing the right thing for the customer? Or you're just trying to make a couple bucks before the doors close? So eliminate that air of instability, because people want stability in terms of employees.
Well, one of the things, and again, my own experience lately is like realizing that there's a time, because I come from this world where there's so many people full of shit, that I've had to I've leaned.
And he was just pointing at me and Robert, just so in case you're not watching the video.
I've been in this world of people full. No, but it's just, but the guru space, and it is what it is. And I don't mean the present company excluded, obviously.
But he keeps pointing at us.
No, but my point I'm trying to get to is I have tried to be as authentic as possible, and that was a mistake. Hear me out. Give me some rope on this conversation.
There's layers to this.
Yes. Be authentic, but there's a time to be strategically vulnerable, and there's a time to be strategically confident. And I think going back to the oh God, and it's something I just learned in the Goldman Sachs program a couple weeks ago, which was, money doesn't go to those who need it. Money goes to excitement. It goes to the cool program. It goes to the thing that has velocity. So if you're conveying oh God, guess what? Nobody wants to get on that boat.
Exactly.
Well, you were talking a minute ago about Henry Ford. If you're watching the video, you just saw me with my phone, and you're probably thinking, wow, Tim's bored. But I had to look something up that I remembered, and I wanted to verify it before I put it on video.
Yeah. There's no Jamie here like Joe Rogan, yeah.
So Henry Ford's mentor was a guy named, you've probably heard of him, Thomas Edison.
Yes.
And people they forget that, and they don't realize it. And Henry Ford started out building steam engines. And the first automobile in America was called a horseless carriage. But the real loser in the automobile industry was wagon makers, except Studebaker. Studebaker made all the wagons for the U.S. Army, and then made one of the first automobiles in America because they pivoted. They morphed right? They could have easily, and we've seen this in real estate a lot, and this is where I want to take this to. They could have easily said, it's a fad. I'm going to keep making wagons. And no one my age would have ever heard the name Studebaker. Do you know anyone else that made any other? Now I'm telling you there was a Studebaker wagon maker. Name another wagon maker.
Red Wagon. The Red Flyer. Whatever you call that thing.
It's good. This is the way he does
It's Paddy Wagon.
So I want to get back to real estate investing because, Robert, you're in Florida, obviously a market that gets really hot, really cold, really hot, really cold, real estate wise, and then gets really windy and wet, and then humid and hot.
Usually just humid and hot.
Yeah.
Yeah.
What are some characteristics? Because you've done hard money, conventional mortgages, title business, all sorts of things. What are some characteristics that you've seen in the last 3 years that make investors in today's market successful?
That's a very good question, and it's a loaded question because you can have the same business model in two different markets, and it's not just Florida, right? Everything's micro, kind of centric, right? So, for example, Orlando is a very large city in terms of space, right? Not density compared to probably higher density MSAs. But certain parts of Orlando, these properties are going to fly off the shelves where other ones don't. Same business model. I'm going to buy cheap. I'm going to remodel. I'm going to sell. It doesn't do it. It doesn't work like that. So the reality is, it's difficult to ever predict. And I'd be a fool to tell you this is exactly why this person's successful or why I'm successful and that other person's not. Because I'm going to tell you in certain markets where I thought I was going to make a home run, I don't hate to use that term, that term right now, but we took a beating on for the first time in probably 15 years. Why? Well, for 3 years plus you've been hearing me, you've been echoing the same exact message. People who know the mortgage space, we've been telling people interest rates are going to increase when they were in the fives, right? I've been saying it even here in the boardroom for 3 years in a row. I didn't expect a 300 basis point increase on the first run. You look at multiple asset classes. You're having multifamily operators. You're having excellent, amazing good operators with good properties that are performing well that have simply adjusted their rates have adjusted. Because the current interest rate climate, now you have a performing asset and a performing operating team that can't perform because they have to bring so much more money to the table and they have to now do capital calls and investors may not have that. Okay, so that's a major problem. We have over $1 trillion that are resetting. So it's not just Florida, but I say this as a whole because it's a bigger problem. When you have interest rates that are as high as they are and price points that are continuing to increase, as we all know they're happening, you're having major affordability issues. So the question is, okay, how can the average Joe, let's say, get into a rental property, let's say in Florida. In Florida, it's becoming increasingly more difficult to be able to buy something that's going to properly cash flow. Okay.
Insurance
is through the roof, right? But you're having that, you're having problems in different markets. So again, as an investor, how do you shift and how do you adapt? There's a solution to every problem for the most part. You just have to be able to see it. In the multifamily example that I've given you, now you're having a whole wave of funds coming up with preferred equity plays, or what I like to call rescue capital.
Can I say something?
Sure.
I've been on site for the boardroom, the Q1 boardrooms where we're recording this. I got here about 11 o'clock today. It is 4 o'clock right now. You are the fourth person to bring that up.
What? Rescue
Multifamily syndicators raising preferred equity as a rescue mechanism.
Yep. I mentioned it about...
That's how big this is.
There's a huge, huge opportunity
Can we explain
here.
what that is?
Sure. So let's say, for example, all right.
Wait.
I mean, for the audience, obviously.
Of course.
Kindergarten, marine explanation.
All right.
I mean, I know what you're talking about.
All right, so let's talk about this in crayon kind of terms.
Yeah,
all right.
cool.
So remember back in the day when you had the whiteboard and you have a fundraiser you're trying to raise, money for, right? Hey, we need to raise $10,000 for the new park at the school, right? Let's say you draw that little, the little funnel, all right? That's part of the capital stack when it comes to commercial financing or even residential financing.
Oh, you mean like the little gold thing? It looks like a thermostat?
Exactly.
Thermometer.
So you're filling up the money,
filling
right?
it up as it goes. Yeah, okay.
So let's say, for example, a lender is going to give you, just keep it simple, 70%, okay, of that raise.
So you said 10,000, so we're up to $7,000.
$7,000, right? So in this example, to buy this property, it's going to cost $10,000, and a lender is going to give you 70% of that, which is $7,000, right? That's part of your capital stack. Now you have to raise that extra 30%. That can come in the form of private equity investors, right? LP capital. So in a general fund structure or in a syndication, you're going to have your general partner who's in charge of the asset. That's that person who's operating the boat. They're racing the horse.
And
Okay.
typically they keep like 20% or something.
It varies depending on the waterfall structure and,
Right.
and you know what they're doing for the asset.
But we'll just
Okay.
say that's the teacher for now.
That's the
they're in
teacher.
charge.
Right, they're in charge. They're the CEO. They're looking for investors to carry that vision through. So they're going to offer their investors a piece of the profit, okay, equity, in exchange for the invested capital. We need to raise 30%, okay, or $3,000. Let's say that syndicator, that fund raises that $3,000. Now you're good. All right,
From
you bought the
from
asset.
three Tim Herriages, give $1,000 a piece,
Right.
and he's in. We're going to make you're in charge of this right now. I put the three Tim Herriages show up. We all put $1,000 a piece. You got $7,000 from the bank. You got your $10,000. Now what?
Now you bought the property. Now let's say you go through the property improvement plan. You fast forward, the property stabilized. Everything's going great. That $10,000 property is now worth $15,000 if you were to try to sell it. Okay. However, you borrowed at that $7,000, let's say at 5%, okay, on a 3-year term. It's taking you 3 years to renovate that property, stabilize that asset in order to take that $10,000 to $15,000, okay? But now what happens is the rate adjusts, and the valuation is directly attributed to the cash flow of the property. So now the rate goes up 300 basis points, okay?
3%.
3%. So from 5 to 8%, your cash flows are eradicated. So is the value you just created. So what do you do?
So
at
even
this
though he got the rents up to make it worth $15,000, the cost of the capital, the interest rate, and the taxes and the insurance all went up so much that the value typically
the value is eroded because the cash flow, the net operating income has significantly been reduced. So what can you do? And a lot of operators are doing this. They're literally turning the keys back to the bank saying, I'm sorry, I can't do this. Because they're going to have to go back to their investors. And I'm going to tell you this right now. Any investors raising capital, the last thing you ever want to do is do a capital call, okay? Now, there's a capital call in terms of someone gives a capital commitment saying, hey, I'm going to give you $1 million, okay? And you're calling that capital as you need it for the project until that project's fully funded. There's a difference when that investor says, I'm going to commit $1 million. Then 2, 3, 4 years later, when they're expecting a return, you're going to go, hey, I need another $500,000.
oftentimes that $10,000 property that he got the rents up, but the cost of everything went up, it's now worth $7,000. When that plan was to make it worth $15,000 because of the cap rates. And so now the bank's like, yeah, sure, we'll refi it, but we need $2,000 more because we can't be 100% loan to value.
Right.
And so he has two choices in this point. He either calls the three Tim Herriages that already put the
Added
$1,000
more
each,
money, yeah.
and he says, hey guys, I need $2,000, or he has to go raise additional money for that $2,000, and that's where the preferred.
That's where the preferred equity, or what I like to call rescue capital, is coming in. So let's say, and this is a beautiful strategy that is truly a win-win.
If you're the rescue capital.
If you're the rescue capital, but here's the thing, you always, as the investor, your number one goal should be protecting your investor's capital. Okay, if that means that you work for free for 4 years in order to make sure your investor's capital is returned, sometimes you got to take one on the chin. That's what you got to do.
Yeah.
So by bringing in that rescue capital, whatever you negotiate with that superhero, okay, that's going to save that project, okay, it's what's going to determine how much of that equity you're giving up, but you're also putting them in priority. Okay, so what happens is in a preferred equity position, remember how I just talked about that graph? That lender's still going to be in first lien position. They have $7,000, okay? That in order to refinance, in order to restabilize this asset, that preferred equity guy's going to say, I'm going to give you the $2 million you need to buy down your debt, but now I'm going to be in second position.
Well, basically,
It's like
you
mezzanine
come in with.
financing.
So they're coming in with because like the three Tim Herriages that were a part of it, they don't have a lien, they have equity on
They have equity in the property,
So the
correct.
preferred equity, when the rescue capital will come in, not only do they have equity in the company, but or in the project, but they also have a lien on the money as well.
Well, it's the waterfall. So basically, imagine this.
They're just moving up.
Originally,
It's
the
like-
bank was
it's like
first,
mezzanine.
and then the three Tim Herriages were second, and then everything beyond that, the three Tim Herriages and Robert were
GP.
splitting, right? Well, now he called the 3 Tim Herriages, and they're all like, man, we don't have it. We're not putting any more money in your train wreck deal.
Right.
Well, then Ryan Harper steps in and says, I'll give you the $2,000.
Right.
But then now you just bump those 3 Tim Herriages up, and you're in between them and the bank. So it dilutes, in essence, the original investors. So the deals that I'm in personally, that I've been diluted in, every one of them, I said, no, I'm not giving you any more money. I don't believe in your model anymore. And actually, frankly, I've kind of like written them off completely in my head.
Right.
They all raised rescue capital or preferred equity. And all the scenarios are basically what Robert said. I will be lucky to get my money back.
Right.
So they will have had my money for 6, 7, 8 years, and I may get all my original investment back, which in today's dollars, as an investor, I'll just say that's like losing 8% a year. So I won't get all my real dollars back. I'll just get the actual
I don't want to say it's the worst case scenario, because the worst case scenario is zero, is the GP turning the keys back into the bank. And that, in my opinion, you know, that's a very stressful decision that GP's got to make. And sometimes maybe they can't raise the capital, whatever the case is. But I have seen already, deal structures. I've consulted on deal structures that have been very, very good win-win situations where that LP investor is not only made whole, but their profit has been generated because the value has been restored, Maybe not to 15 million, but look, I'd rather go from zero as a loss to an asset that was worth 13 million to maybe now it's worth 13. But here's the situation with that too. Is it worth 13? Remember, when markets go up or down, you lose when you sell, right? If you hold, everything goes up. Everything will eventually go up. Do I think markets will stabilize? Of course I do. There's no way that they're not going to. Markets have been flow. Everyone knows this. You just look at a single stock ticker. It goes up and down, So what does that mean? Does that mean that your investment thesis has got to change? So sorry, investor. Instead of this being a 5-year investment, we think that this is now going to be an 8-year investment in order for us to achieve what we said we have to do for you. Yeah. Are you okay with that? Of course. For smaller investors that need that money right away, and they shouldn't be making these investments. But for most investors, especially the type of investors that I deal with, this is a single line item in a portfolio. So when they're looking at their statement, much the way most people look at their 401k statements, they're going to go, well, shit, that one's down. And then they're going to have their sip of coffee and they're going to move on. Yeah. It's going to hurt more when you're that one investor going, hey, I got presented with this smoking deal and I'm going to give you $250,000 and I only have 400 grand, I'm giving you 50% of my net worth.
Well, one thing before we wrap up is like, if you're familiar with Crow Holdings, I was in a conversation with Michael Levy, and he was talking about how, like, regardless of the economy, regardless of anything, if you believe that America is up and to the right, it's just a matter of how long can you stomach the pain, whether it be 2008 crisis or recent times of COVID. If you can hold, you'll be fine.
What has time taught us so far? Look at the people that bought properties pre-2008, but actually held on to them. Yeah. Okay, they're winning. The market might have taken a catastrophic drop and they've lost all equity, but are those properties valued at the same or even greater than they were? That's a perfect example where you just hold. By winning, you hold.
A friend of mine said, often it depends whether you're looking through the naked eye, glasses, binoculars, or the Hubble telescope. Eventually, it looks good. and I like that because now the Hubble telescope is a bit of a stretch, but time is undefeated, right? Robert, we're going to wrap up because you and I have a meeting to go to, but I want to do something real quick. True or false? The real estate market is hard.
True.
True or false? The Marines are tougher than the Army.
Way fucking false. Totally. Not even.
True or false? It's better to go at this with a team than alone.
100%. Everything in life, in my opinion, is worth doing as a team.
Yeah, I've enjoyed getting to know you the last several years. I know you're never short on words. You've got about 2 minutes. Our audience is much more the newer investor, the kind of person looking for help building their business. Anything you want to share?
For the newer investor, people that are looking to build their business, I would say stay the course. Okay, nothing goes to plan, and if everything goes to plan, you're not planning well enough. As much as that contradicts itself, you're playing it safe. Okay, and again, there's nothing wrong with safe, but my point is that everyone has setbacks. Okay, how you react to those setbacks is what's going to determine whether or not, I don't know, maybe you might sit in one of these kind of chairs one day, okay, or you're going to be going back to a W-2 job, and there's nothing wrong with either. But my point is, if this is something you want to do, stay the course. Not everything always pencils out. Not everything goes to plan. You thought you were going to make 50K on a flip. You're making 30. Take it on the chin, move on, go to the next one. That's it.
Man, I appreciate you doing this.
Absolutely.
Party thoughts?
No, it's good conversation.
That's it, everybody. Thanks for stopping by. We'll see you next week.